Nicky, as Alicia was saying, the rand's firmed up quite nicely from yesterday's levels, around 763. Do you think that this budget is being viewed as market positive, particularly because of the consistency we're seeing in policy?
Yes, I think so, and I think it cleared up some serious uncertainties, certainly around inflation targeting, certainly around government's approach to the rand. It also genuinely emphasised that government has an understanding that it's a fairly difficult task that lies ahead of us, and also appreciates the importance of really addressing that very large fiscal deficit.
Of course, we have breaking news at the moment that COSATU has renewed its call for the scrapping of inflation targets. Do you think that the Minister was emphatic enough in yesterday's budget that inflation targets are here to stay, or do you think this is just part of the ongoing debate over inflation targeting?
I think he was pretty clear. I heard in subsequent conversations he had with several journalists that he repeatedly said, as far as he is concerned, as far as government is concerned, that we now have clarity on the underpin for monetary policy and that it remains inflation targeting. Where the ambiguity comes in is that they do also say, that they have to take a broader view in managing the inflation targets. Now, that could be negative, that could be positive, and I think that largely depends on the perspective that the governor sets going forward.
Of course, we had the minister yesterday reading out a letter that he'd sent to the governor, and in it he talks about, yes, the broad inflation targets and the fact that jobs and employment and growth must be taken into consideration during that. But that's really what they have been doing over the course of the past couple of years, because we have been outside of that inflation target, and it's really because of the growth picture, isn't it?
Oh, absolutely. So it's not really, you cannot really apply inflation targeting unless you look at growth somewhere along the line, because clearly that determines whatever demand pressure is likely to be on prices, whatever type of growth you're likely to see in credit and money supply, which of course could fuel inflation. At the same time, if you have no demand or that demand is very weak and credit demand is still very, very weak or even contracting as we have, then you need not worry about demand pressure on inflation, which is the only thing you can really control through changing interest rates.
Nicky, your view on the budget deficit of 7.3%, slightly better than the market was expecting. Of course, government debt is going to be rising from 27% of GDP last year up to about 37% next year. And obviously the debt servicing costs are going to rise exponentially as well.
Sorry, can you just repeat the last bit of your sentence again?
This is obviously going to add to a big increase in debt servicing costs going forward also.
Oh, absolutely. And I mean, if you look at the expenditure breakdown, debt servicing cost will increase by over 20% over the next 3 years. So that's going to be a substantial strain. But that is exactly why you have to control the deficit. That's why it's critical that we do it. Because we have been fairly disciplined since 1994. We have slowly chipped away at our deficits. One bad year and we're back at 7.2%, and you've got debt service costs escalating, and it can so quickly ramp up to levels that become very, very difficult to deal with, and overall that just deprives money from real government spending priorities.
Are you comfortable though that we can bring that deficit back down to 4.1% the year after next, as was laid out in the budget?
Well, that's going to be a hard slog. I mean, we have our doubts in terms of their ability to materialize these efficiency gains they're talking about, in terms of the speed with which they can achieve the so-called more with less kind of motto. That is all very good stuff. Increased productivity is always a good thing and can only produce good results. But we do have our doubts whether you can achieve that in 1 year and crawl back government spending from close to over 17% to what they're planning for, which is in the order of 9% increase. So that's going to require substantial discipline, and I think that they might find that tough going and a bit of a hard slog. So there is a risk come end of this year that we get to a situation where the deficit is a little bit higher than they budgeted for, but as long as it's a little bit, I don't think it will disturb the markets too much.
Nicky, we have to leave it there. Thanks very much for coming onto the show this afternoon.